In a major development, the Indian rupee hit a record low against the US dollar on Friday, dropping to 87.96, weighed down by investor jitter over steep US tariffs on Indian goods. Washington recently imposed an additional 25% tariff, doubling India's total duties to 50%, triggering a sharp market reaction. But the currency story doesn't end here. Against the offshore Chinese yuan, the rupee fell even further, touching 12.3307, marking a 1.2% decline for the week and 1.6% for the month. Over the past 4 months, the rupee has slumped nearly 6% versus the yuan. Economists say the contrasting US tariff treatment for India and China is behind the move. While Indian exports face a punishing 50% duty, Chinese goods are subject to a lower 30% tariff, with higher duties still paused. A weaker rupee against the yuan could offer a partial cushion for exporters hit by US tariffs, making Indian products relatively cheaper compared to Chinese rivals. It could also help narrow India's trade deficit with China. Apparently, the Reserve Bank of India closely tracks the yuan-rupee cross. While the rupee has lost over 1% against the yuan this week, it has reckoned only 0.3% versus the dollar, staying above the psychologically key 88 per dollar level. Bankers say the RBI's interventions have been crucial in containing the depreciation pressure. The currency moves add another layer of complexity for India's economy, already reeling from the Trump administration's tariffs, which could cost the country $55 to $60 billion, hitting employment-intensive sectors such as textiles, footwear, jewelry, and gems. With that, rupee falls to all-time low of 87.97 amid US tariff concerns.